Hi, my name is Cheryl David. I'm a fintech consultant working with startups on the internationalization and market entry, proposition development, also other stuff. Over the last few years, I spent my time mostly advising the UK government on fintech and helping them understand what fintech is and how to best support the industry as it was developing from the early days of 2014, 2013, and until today. And I think it's going rather well. Thank you everyone for coming and listening to us. I wonder how many of you went outside to watch the RAF fly past. I know I did from one of the windows here. But it was great to see 100 planes flying in formation, everybody kind of doing their own thing, yet very well coordinated with each other. And it's a bit of a far-fetched connotation to make, but in derivatives, we're looking at the same sort of coordination that is required in a market that is rather opaque, over the OTC, in an industry that is based on information asymmetry and trying to exploit that. Still, all the participants have to operate in coordination in order for the market to function. We have a very experienced panel here today to talk about how technology is changing that, if it is changing that, and what is the benefit for the customer, whether that's a retail customer or a firm or the industry itself. Okay. Yep. To my right is Barney. Barney is the founder of Vega Protocol. We've got Boaz, the founder of ShareGain, and Kieran from ISDA, the International Swaps and Derivatives Association. If you could please take a minute to introduce yourself.
My name is Barney. I'm founder at Vega Protocol. Vega Protocol is a company designed to create an end-to-end decentralized platform for trading smart products, including derivatives and other similar products, and to reduce the cost of trading those things and open up market access to to more participants and to more markets.
Great. My name is Boaz Yair. I'm the founder and CEO of ShareGain. ShareGain, we're basically bringing the sharing economy to our stocks, bonds, and ETFs. What does it mean? It means that we're opening up a $2 trillion market called securities lending, whereby for the last 45 years, financial institutions have been lending out their portfolios to one another and gaining that incremental income, rent. And we've developed a platform that enables private investors to enjoy from that additional income and basically leveling the playing field.
My name is Kieran McGonigal. I'm Assistant General Counsel at the International Swaps and Derivatives Association. We're a trade association representing over 900 market participants in the derivatives industry, including banks, buy-side, law firms, infrastructure providers, and fintechs. My own personal role at ISDA includes responsibilities for a lot of our legal work around DLT and smart contracts.
Boaz, I'll start with you because securities lending is something that we all participate in, whether we know it or not, mostly through pension funds and the money that the pension funds are channeling through asset managers. But what you're doing is opening up the market through basically socializing data. I mean, that's what it's all about. How is the market reacting to that greater transparency?
Like everything else, greater transparency creates more use cases, creates more alternatives, creates more opportunities. What ShareGain is all about is we are inadvertently enjoying from securities lending, maybe through our pension funds. But there's about $40 trillion worth of securities sitting idle today, collecting dust instead of collecting income. And they belong to all of us. They belong to retail clients, to private banks. And this is the market that we're going about. Like any other sharing economy, it's all about opening more supply and democratizing it and bringing it in an automated, simple and democratized way.
And Barney, you're looking at a sort of a similar information asymmetry and opaque markets, but from a different perspective. Can you sort of tell us how you approach the problem?
Yeah, absolutely. One of the things that we have noticed, and I've noticed over my career, is that that the derivatives markets and markets for many other financial products do sort of rely on a large asymmetry, and there's a very small number of players who control those markets, and that control of access means that the the rest of the world who need access to those things for their business purposes or whatever other reasons effectively end up paying over the odds for access to those markets thanks to that asymmetry. And one of the sort of founding principles of Vega Protocol is that asymmetry shouldn't exist, and that any participant who wants to access these products should be able to do so on the same basis.
But how are you implementing that?
So there's a number of ways that we're looking at implementing that, and the main way is to create a more permissionless way of connecting participants on a peer-to-peer basis. So looking at the same sort of principles that underlie the cryptocurrencies like Bitcoin, and actually making transactions peer-to-peer, but taking those principles and applying them to financial products.
And Kieran, as an industry association, that it's basically your documents help oil the system, and I think 100% of OTC transactions happen with your documents. How are you evolving your thinking around smart contracts and around automating that legal code into computer code?
Sure. So, I mean, at ISDA we see that there are a lot of potential opportunities in technology to, I suppose, solve a lot of the issues within the industry that have sort of evolved since the financial crisis. So, since the financial crisis, obviously, we've seen much more regulation. We've seen the derivatives industry sort of transform from a quite lightly regulated industry to a very, very heavily regulated industry. And that has meant that a lot of our member firms have had to build a lot of systems in a very sort of quick way in order to adapt to changes in regulatory developments. And that has led to a lot of fragmentation in systems and a lot of sort of, I think, as Barney mentioned, I think asymmetry between how different types of firm handle the various different pieces of data that needs to flow between firms as part of a sort of ongoing derivatives trading relationship. So within ISDA, we see a lot of opportunities for further standardization. You mentioned the ISDA Master Agreement, I think, is a really good example of legal agreement standardization, and is something that has helped to, I suppose, facilitate and promote the development of common commercial and legal standards in the derivatives industry. We see further opportunities for the development of standards in processing and data. So ISDA at the moment is currently working on what we call the common domain model, which is an attempt to, I suppose, take a OTC derivative transaction and break it down into its fundamental component parts and attempt to kind of simplify and create a very sort of uniform or common way of referring to the way that process works and the way in which the data flows and is captured in firm systems. So, at ISDA, whether it's talking about sort of common domain model, whether it's talking about smart contracts, whether it's talking about further standardization of contracts, the sort of overall objective is to introduce greater standardization into the industry so as to promote the development and adoption of new technologies like DLT and smart contracts.
But with your legal hat on, how do you view smart contracts? Are they contracts? Are they smart?
Yeah, I mean, there's that famous quote, isn't there, that a smart contract, it's neither a contract nor smart. And I think sort of depending on which hat you have on, you might look at it in a different way. So smart contract, I think as a lot of people in this room would understand, it is a piece of executable code that does something if it is executed. I would tend to look at a smart derivative contract or a smart legal contract as being something slightly different. So that would be a contract which today might exist in natural language form, but in which certain of the operative provisions have been taken out and represented in a more formal, digitized or machine-readable fashion, such that then the provision is capable of being automated.
So like a hybrid solution,
bringing
the two together.
Yeah, I mean, you can have two different models, I think, potentially. You can have what we call the external model, and that is where you have the smart contract code operating outside the contract. The contract remains in its natural form. The obligations between the parties remain as they currently are today. And then you might have a different model, which we call the internal model, which is where you take the natural language contract as it exists today, take certain of the operative provisions that exist within the contract and render them in code or some other machine-readable form. Excuse me. And that's I think that's quite interesting from a legal perspective, and it raises all sorts of issues around enforceability of contract code, etc.
Okay. So obviously, and Boaz, next one is actually for you. Obviously, there's an opportunity for greater efficiency in the market and greater transparency in the market. But what you guys are doing are not really disintermediating anybody. Essentially, it's opening up the market. Why have you chosen that way? How do you, is that the best way to make this industry perform a little bit better for its customers?
Well, we looked at capital markets, and I came from capital markets before, and it was the big thing about capital markets is the fact that there are intermediaries there that it's very hard to disintermediate, and at the end of the day, you need the level of trust that's built into the system, and you need to find the best way to market. And what we found is sort of a quasi-model, which we call disruptive collaboration, whereby disruptive is a good thing. You're coming in with disruptive technology that actually enables, brings new participants, automates, enhances efficiency. Everybody's happy. But when you look at the way that we found to disruptive collaboration is finding what are the problems that the existing market is facing, and how do we actually solve those problems with the new supply that we're bringing into the table, and that's through technology. And what we found is that when you collaborate with the best of breed, like you collaborate with investment banks, with biggest custodians, and you solve problems, and not just trying to cannibalize, then they're much more willing to collaborate with. And I think at the end of the day, there's been no, correct me if I'm wrong, but there's been no past example whereby a capital markets fintech actually was able to disintermediate the market and stand on its own, even on the B2C basis. So yeah, we believe that's the way going forward, as long as you bring value to both sides of the table.
Barney, you're trying to recreate it from scratch. Is that a fair assumption?
Sort of, and I think when we talk about disintermediation, I think it's important to think about what it is we're disintermediating. And certainly, I think even the current incumbent players in capital markets would be very happy to watch us or anyone else help them disintermediate the hundreds of support staff in their back office who may take manual steps of executing contracts, or all of those aspects of their operations. So I think what we're actually looking at with the protocol we're designing is an attempt to disintermediate some of that work and to streamline the process. And I think we're also taking a kind of two-pronged approach to how we do that. On the first side, the interesting and exciting opportunity is to disintermediate some of the current players, to go direct maybe to new and emerging markets, or to what they call the underbanked, and actually start creating markets and products that wouldn't otherwise exist. But there's also a huge opportunity that we're looking into just as fervently to go into the incumbents in the industry and help them to streamline those processes and disintermediate parts of their own organization. And I think both are important, and in the long term, whether the incumbents and the market catch up and take over the new markets, or whether this new sort of intermediary-free model of more peer-to-peer capital markets wins out, I think is something we'll have to wait and see.
I think that's interesting, and I want to see the board meeting where they discuss, should we go with efficiency gains or disintermediation gains for staff reduction. But from an ISDA perspective, we've got two tech companies here with views on how technology can affect the market, and different views on how to actually achieve that. How are you taking that as an industry association into your conversation? What is the role that these guys can play?
Yeah, I mean, it's interesting. I mean, I think they both raise really good points, and I think sometimes the phrases disruption and disintermediation aren't entirely useful when we're talking about an industry like the derivatives industry, which is heavily regulated and does rely on intermediaries for very valid purposes. But I think Boz, I think really hit the nail on the head when he said, we need to identify what the problems are first before trying to develop solutions. I think, oftentimes when I look at sort of fintech generally, I think oftentimes you see a lot of solutions looking for problems, whereas in the derivatives industry, there are clear identifiable problems that need to be resolved, such as fragmentation of systems, operating costs, back office operating costs within investment banks. And these can be, these problems can be resolved through use of technology. So I think, what our members really want to see is, I don't think they want to be disrupted, but I think what they want to do is they want to hear, ideas around how those issues can be solved, and work with smaller providers in order to deliver those operational efficiencies and cost gains.
Have you guys been involved in those discussions? Do you need to, Barney?
We've had some opening initial discussions actually with ISDA, and we're looking to sort of create relationships and partnerships across the industry for what we're doing, and we certainly don't think that we're going to come in and create Vega aside from the rest of the industry on its own. It's getting any of these gains, and I spent 10 years in consulting trying to help banks, and often they didn't get as far as they wanted to, but help them find efficiency gains or reduce costs or create industry consortiums for settlement or whatever it was they were trying to do. And doing that is really, really hard. And I think the only way to get there is to come up with something that not only works for everyone and incentivizes everyone to move towards it, but something that's open and collaborative. And that's really the only way that these gains will ever happen.
Yeah, I think just to add something, I think so for ISDA, and we have in securities lending, there's a similar association called ISLA, which is International Securities Lending Association, and we became a full member. They don't have a membership for fintechs, but we became a full member, and we're trying to be a thought leader from within, and push things from within and help a lot. And we see the change. It's tiny steps moving forward, but we see the change and we see the openness when nobody's trying to disintermediate from day one, but and creating caginess around the industry, but we're trying to open up and create gains for everybody, then much more willing to address the problems that everybody knows.
And in the market, it's been developed for years. There's lots of players, lots of steps that creates all the complexity from a cost perspective, from a legal perspective, but there's also standardized of interface. How do you overcome that? I mean, it'd be great to have a DLT solution, but it's got to be, does it have to be one that the entire market runs on? Do you find it more difficult to work with different companies and different standards and different systems?
It's hell.
So
what do you do about hell? But this is the challenge. Herein lies the challenge. I think there's a great saying. I heard it in Eric Schmidt and Reid Hoffman in a blog in a podcast, and they said the most scalable ideas are not the ones that are dealing with dramatic problems, but the ones that are solving neglected problems. And herein lies the opportunity, where the challenge is big, where you got multiple interfaces. When you have, I remember we came into a private bank and offered, and I said, well, do you have any API packs? And he looked at me and said, AP what? and then I said, okay, thank you very much. I get it. It's another 6 months, but now after 4 or 5 months, they're starting to talk about, we're thinking about APIs and doing stuff. So it's opening up. It's changing. It's hard, but herein lies the opportunity.
And Barney, interoperability? I'm sure you've heard that a lot.
Yeah, I think interoperability is super important, and I think I don't think there will necessarily only be one standard for any of this. And there are different types of interoperability. There's what's the fundamental protocol or protocols or systems these things are happening on, but there's also the common APIs and standards and things like FIX that can be used to trade them. And I think both are important.
And Kieran, is disruption equals democratization, really? Are we heading that way? I mean, what?
It's an interesting question. I mean, I think I kind of come down somewhere in the middle. So I think collaboration is really important. And I think Boz raised, again, a really good point around how the technology community needs to engage with the market through trade associations such as ISDA or ISLA. And I think it's a two-way conversation. So although I think the technology companies need to come to the table and they need to have that dialogue with the market in order to determine what the problems really are that need to be solved. I think similarly there is a responsibility, I suppose, or an incentive certainly on behalf of the market to also engage with the technology community. And I think having worked in this area for the past year, that's one of the areas that I found most challenging. And I think it requires a little bit of a mindset change. So whereas before organizations like ISDA, for example, represented its core membership, its market participants within the industry, recently we have been opening up our membership and creating new tiers of membership to allow fintech firms to also join and to contribute to some of these discussions around standards. So I think things like that are important. And I think, I talked about the industry and, from my perspective, the legal community engaging with the lawyers. A lot of the work that is going to be trying to do in the next 5 or 6 months is to produce white papers and technical guidance for technology developers, or technical legal guidance for technology developers, which will hopefully attempt to, I suppose, dispel some of the myths and try and simplify some of the kind of the legal framework anyway that exists within the derivatives industry. So that's something that's coming, and that's something we're aware that we need to do more of.
Yeah, so hopefully we're going to open it up soon for questions from the crowd. I don't know if there's anyone who likes to ask a question right now. Can't see anybody. Is that going to be turned on? No. Right. In your opinion, name some companies that will transform the opportunity in market data. All right, market data is an area that is dominated by a small number of large players. If there's anywhere that needs some intermediation or a competition, but that is not easy to do, obviously, resource heavy.
No, I mean, I think from ISDA's perspective, again, we're not kind of in the business of picking winners, I suppose. I think what we're trying to do is, as I mentioned before, through the Common Domain Model Initiative, try and create a set of common process and data standards that technology developers can build to. So, whereas I couldn't name a specific company, I think there are opportunities that will arise, and I think it'll be easier for companies to operate in this space once those kind of core standards are in place.
Well, Boz, where do you get your data from?
So we obviously have API with the existing vendors, but we generate a lot of our data ourselves.
Do you sell it back to them, or?
No, at this stage for the community, for the users of ShareGain. The next step will be obviously offering some more tiered services, creating more predictive analysis and so on. But we believe, as anything else, that the data, in these opaque industries, the data should belong to everyone.
Barney, your?
Yeah, I think market data is a difficult one because the number of different sources of data and the cost of and the difficulty of building relationships with all those sources, packaging it up and making it available, lends itself to large players doing that at scale. But I do think, like these guys have said, the open standards and new ways of sharing and accessing data will create lots of opportunities for maybe different models for certain types of market data, and for new companies to come in with new insights and new analysis and new ways to use the data.
The third question there, interesting. How are you encouraging customers to use your platform? That's sort of the million-dollar question, isn't it?
With us, it's, to be honest, as everything else, you need the brand, you need the traction, but at the end of the day, if you're creating value to your clients, then it's creating value to the clients, and you come across as trustworthy, then clients are willing to take that leap of faith. And actually with ShareGain, it's very easy. We analyze their portfolios. They upload a portfolio. They see what they have in, and the conversation totally changed. Somebody uploads a portfolio and they see, hey, I've just left, $1 million or 200,000 or a couple of $1 million on the table, and then the conversation becomes very pragmatic. It puts immediately to the point.
So you've got a dollar value that you can put. This is money left on the table.
Power of data. Instead of me, talking a big story. Here's your portfolio. Upload your portfolio. Check what you've left on the table, and everything is obviously the power of fintech. Everything is open. No hidden details. No hidden algorithms. Yeah. Obviously, no prediction. This is what you've left on the table last year. Do you want to talk?
Yeah, I wish we could talk a little bit more about the risk profile of that, and I'm sure that's a conversation given the size of ShareGain. But you're trying to create a two-way market, and you get everybody, the suppliers, the vendors. Barney.
Yeah, that's actually it's really important. Firstly, the first thing we're doing is we are starting with markets that maybe are underserved. So we're looking for real problems, and we're looking for real markets that people would like to trade or like to have access to, but they don't. The second part of it is that one of the way that we are incentivizing our public network is through what we're calling tokenized liquidity. And so we're effectively creating strong incentives for people who are financial institutions and funds and market makers to come in and provide liquidity on our platform to make the other side of the market.
We got time for one last question. There was one on the ASX and their deal with digital assets, which is an interesting one. Since they announced the deal a couple of years ago, I think 2 CEOs have left already, and the third one is shaking. And they've announced something that is somewhat smaller than the initial announcement. But if central counterparties are moving towards a completely new technology, I think that's a signal for others. From an ISTA perspective, is that something that you were encouraging? Do you see, I mean, more than encouraging, do you see others going in that direction?
No, I think it's probably fair to say. I mean, I think this technology is still at a very early stage, and I think in terms of practical applications for it within the derivatives industry, I think it really remains to be seen how and when people actually develop practical applications. But in terms of moving to a completely sort of CCP sitting on a blockchain, that's not something that we're expecting anytime soon.
And I think it'd be great to see the Aussies give it a go and either fail dramatically or have a major success, which means that everybody that uses ASX will have to transition to that new platform. So that's definitely something to look at. But I think we're talking at least 2 years from now for it going live on a small scale. I think we're just about out of time. Thank you very much for your insights and sharing your experience. Thank you very much for listening.
Thank you.
Thank you very much.